Farms.com Market School with expert commodity analyst Mo Agostino is an online educational video series designed to help you, the farmer, improve your knowledge of grain marketing. Farms.com Market School is brought to you by DeKalb Brand Seeds. DeKalb, growing confidence. Today's topic is about the factors that affect basis, our third video on basis. Our topics today include, again, the review and definition of basis. We're going to look at the various factors that can affect basis, and finally we're going to summarize and put it all together for you and put that plan in place to manage your basis. Our first topic, again, is the review and define basis. Again, basis is the difference between cash and the futures price. Most of you know that. The biggest risk is futures, not the basis, but I want you to focus on the basis. So corn futures can go from $7 to $3 a bushel. Your basis rarely does that, but you still need to manage it because you can still make more money if you do not. So our second topic today is about the various factors that affect basis. All prices are related through time and space by transportation and carrying costs. All points are unique. Basis is related to costs, but is also a price, a barometer of your local market conditions. So think of that. Basis is a barometer of your local market conditions. The main driver of basis is supply and demand fundamentals in the local market. There are other factors such as storage availability and transportation costs that can also play a role, and there's also some currency plays there if you're in Canada. In years when small crops, the local cash price has been high relative to futures, that means that supplies are low relative to demand, which means that the basis is better or narrower or smaller. In years with large crops, the local cash price has been low relative to futures. This means that the supplies are high relative to demand, which drives basis down, or basis widens or becomes larger. Worse. In our corn example that we're pulling up here, basis improved by 75 cents per bushel for old crop 2010-11 corn bushels in storage in just over 1 month. New crop 10-11-12 basis also improved by 60 cents per bushel in the same period. This is for Ontario cash grain producers. This is the farm market news from John Jordan that puts together the basis for Ontario. Demand remained high as supplies dwindled and basis narrowed as local elevators and end users still were looking to shore up supplies that had yet not been filled. So when you see this type of move, what do you got to do? You got to lock in some basis. We're sticking with cash grain producers in Eastern Ontario. In our soybean example, basis widened by 90 cents per bushel for old crop 10-11 soybean bushels in storage over 9 months. New crop 11-12 bean basis also widened by 95 cents per bushel in the same period of time. So basis widened and got worse. Demand remained quite strong, but supplies were even stronger in the 10-11 bumper crop. Sometimes exchange rates, if you're living in Canada, particularly in Ontario, does have some effect on Western Canadian producers, but that exchange rate, Canadian dollar, can have a big influence on that basis, particularly for Ontario producers. That Canadian dollar, depending on whether it's rising or falling, have a huge impact. As much as 2/3 of that basis is determined by the Canadian dollar. The Michigan, US versus Ontario, Canada example below in this chart shows how a strengthened Canadian dollar encourages Canadian corn users to offer a lower basis. Over the last 10 years, again, I've talked about knowing your historical basis. What's the high, what's the low? In the last 10 years in Ontario, basis for corn has averaged -140 per bushel to a +$1 per bushel over that period of time. Ontario soybean basis has averaged +3 to -3 per bushel over that same 10-year period of time. Soft red winter wheat bushel, which is what a lot of producers grow in Ontario, has averaged a -5 to a +40. So when you get to a +40, what do? You gotta lock in bushels. A plus number plus another plus number is a greater plus number. It's simple math, it's not rocket science. Soft red winter wheat basis has only been a plus number in 2 out of the last 10 years. When you're in a plus number on wheat, knowing this historical information, now you know you got to lock in basis. Comparing the basis offered to a historical 5-10 year average will help you determine whether it is a good, neutral, or bad basis offer, and can help you manage that basis better. Now, in Western Canada, you can see from this chart here, it follows the same principles as corn and beans in Ontario. Basis for canola tends to be the Saskatoon basis plus or minus your freight, depending on whether a point is a surplus or deficit. Similarly, basis for barley tends to be Lethbridge basis plus or minus transportation costs to and from Lethbridge, depending on whether that point is a surplus or deficit. In our canola example that we've just thrown up here in this chart, basis improved by 23 cents per bushel, or $10 and 10.14 per metric ton for old crop, 10-11 canola bushels in storage for 7 months. New crop 11-12 basis also improved by 40 cents per bushel, or 17.36 per metric ton in the same period of time. Demand remained high as supplies dwindled and basis narrowed as local elevators and end users still were looking to shore up supplies that have yet not been filled. Again, in this example, what would you do? Lock in some basis. You've made some more money. In our Minneapolis hard red spring wheat example, and Western Canadian producers do produce a lot of that, basis for December 2011 in this chart, new crop wheat narrowed by 7 cents per bushel over a 6-month period. Western Canadian wheat basis was above zero, or a plus or positive number as market dealt with continued strong demand, tight stocks, and 2011 planting delays due to wet weather. So again, in this example, a Western Canadian producer producing Minneapolis hard red spring wheat would lock in the basis. Historically, this is a very good basis for Western Canada. In the US, over the last 4 to 5 years, U.S. corn basis has been as high as plus 37 to a minus 71 cents per bushel. So when you're at minus 71 cents per bushel, do nothing, let it ride. Hopefully in the future that basis will narrow. Soybean basis over the last 4 or 5 years has averaged plus 56 to minus 136. So again, you get into those plus numbers, you got to lock in that basis. Chicago wheat, soft red winter wheat basis over that same period of time, plus 22 to a minus 358. That minus 358 has just recently occurred in the last couple years because of logistic issues and too much of a big crop. Kansas City wheat basis has gone from a minus 14 to a minus 235. In 2013-14 and 14-15 marketing years brought major logistic issues, as I just said, with very large crops that sent basis wider than anybody had anticipated. When you get into that situation, hopefully you've already locked in some basis. If you've not, do nothing, but you're going to have storage to buy time in the hopes that that basis will narrow over time. In our third topic today, we're going to summarize basis and put it all together for you so you can also put in that plan to help you manage that basis a little better. So there's 3 ways to manage risk. One is your forward contract. You lock in the futures price and basis, and you eliminate that over time. Secondly, you can lock in a basis contract. You do the basis first, leave the futures open, eliminate your basis risk without locking in the futures price. And then finally, you can do a synthetic basis contract where you forward book, contract the grain futures and basis, your net price, and then you take a long position in the futures market at the same time. When the local basis is historically wide, do nothing. When the local basis is historically narrow, do not be afraid to aggressively lock in basis. So again, you're going to need some knowledge of that historical basis to understand whether it's good or bad. Now you know, I've given you some information. You may want to jot it down, put it up on your fridge or whatever the case may be. In summary, basis tends to have a seasonal pattern to it. When supplies are ample, particularly at harvest, basis tends to weaken or gets wider. Sometimes during Christmas, you get an improvement basis because the farmers are not selling. Local elevators may need some bushels, and they'll improve that basis. When supplies are limited, basis tends to improve, narrow, or get better. Basis risk is manageable. Using forward booking contract basis only contracts knowing historical basis information, highs, lows, and synthetic basis contracts, minimum price contracts can help a producer control and make more money with basis. Anticipating where supply and demand will be in the future can also help you anticipate where basis is going as well.